In this video today, we're going to be covering what are order blocks, which factors you should consider when choosing an order block, and what are the qualities that you can attribute to or choosing an order block. That is, if you have more than one order block, if you have like 2, 3, 4 order blocks, and you need just one to trade from, what are the qualities that you're going to evaluate all of these order blocks, and what are you going to put in place for you to be able to choose the perfect order block for you. So in this video, we're going to cover what order blocks are, imbalance, market structure. All of these things do work in hand when when choosing the right order block. So you need to consider all of these things. So we're going to just dive right into it. Okay, so what are order blocks? According to Google, I'll just put it on the screen right here. An order block is a market behavior that reviews the pileup of orders by large entities. In forex, the order blocks are used by banks to split their big orders into small chunks so that they can get their orders filled at prices without disturbing the market equilibrium. Okay, so this is the definition by Google. You can check it out yourself. I don't really care about the definitions. I'm just going to show you an example right now. So when you hear of order block, okay, it is the last buy to sell candle that causes the big move. Meaning, if we have like, let me push this here. If you have a downtrend like this one, right, you can see here that before this big impulsive move to the downside, there is one opposite candle before that big push. So this candle right here is referred to as an order block. Okay, so now there are factors, there are qualities that you have to attribute to these order blocks in order to make them efficient, in order to make them what valid order blocks. Not every order block is a valid order block, but it is an order block because it is the last buy to sell candle. Okay, the last buy to sell, that is your order block, this opposite candle right here. Okay, good. Now, looking at this example here, this sketch that I've drawn here, this is a bullish candle and these are bearish candles, right? You can see that these bearish candles engulfed this bullish candle, meaning at this price point, the banks stepped in with big orders, all right? They stepped in with volume. You know, these banks, hedge funds, and financial institutions, they trade a lot of volume. They trade millions of dollars at the same time. So when these orders are being filled in the market, it causes what we refer to as what impulse, and this impulsive moves always follows with imbalance in price. So I'm going to now cover what an imbalance, what is imbalance, and how can you use it as a factor, or how can you use it in confluence with your smart money concept trading. So an imbalance, according to Google, an imbalance of orders exists when there are too many orders of a listed security that cannot be fully matched by the opposite order on an exchange. Meaning, in this example, we have way too many sellers than buyers. Meaning, with such volume that sellers have with such volume that sellers have introduced in the market, with this kind of volume trading in the market right now, sellers are way more than buyers. And now this will cause an imbalance in the sense that what you can see here, that this last candle here, all right, when it closed out, this the next candle here, this bearish candle engulfed this last candle. So this candle here was supposed to open from here, was supposed to close out this one like this, but instead this one opened down here, leaving this gap. So imbalance is this space between this candle A and this candle C. All right, so we have imbalance is basically a 3 candlestick pattern. Like you see candle A, candle B, candle C. If there's a gap between candle A and candle C, this space here, they are not touching each other with wicks or anything. This space is referred to as imbalance. Okay, let me show you something right here, right now. Let me show you something. Where can I see one really looking good that I can show you? Okay, let's look at this one. Let me just zoom in here. Let me zoom in. Look at this candle here. Look at this candle here. You can see this last buy to sell candle, right? Before this big push. Look at this wick here. The candle, the wick of this candle. Let me use this tool to point it out. This wick here. Before this big bearish candle, this is candle A, right? This is the last buy to sell candle, right? So that's candle A. This is candle B, and this is candle C. You can see that candle A has its wick all the way down here. Then candle C started up here, meaning it touched candle A's close, meaning if candle A's tail is here, candle C's head should touch candle A's tail, meaning they should touch each other before pushing down. So that is efficiency, meaning there is no imbalance here. And what we want to see before considering an order block valid is we need to see what? Imbalance. We need to see imbalance. We need to see that space. Why? Okay, if we have imbalance in the market, 90% of the time, this market will come up to fill that space because the market does not leave space behind. Whatever space is being left must be filled. It is either filled now or some time in the future, but that space must be filled. That is how the algorithm works. It fills up all of these spaces. So right here, you can see that this is imbalance right here. You can see this candle A. This is the tail of candle A. Let me just draw that out. This is the tail of candle A, right? Then this is the head of candle C, opening right here. You can see that space, right? That gap, this parallel gap here. This gap is referred to as what? Imbalance. Imbalance. Let me just abbreviate that. Imbalance is referred to as imbalance. IMB. I'll just abbreviate that. Imbalance. All right. So you see that if you draw this zone out, if you draw this gap out here, this space, if you close up this, if you draw this space out, you see that this market filled that space before dropping. I mean, perfectly filled this space without breaking it. Because why? There's no imbalance up here. This is what the market came here for. So these are the reasons for the market to move to a certain direction. The market moves in a certain direction to fill imbalance, to pick up orders, okay, to fill up imbalance, meaning all of this space in the market. This market is moving from point A to point B, looking for gaps to fill. So if your order block has a gap, therefore it is a good order block because there is a reason for the market to come back there. Okay, now let me give you this is your imbalance here. Let me just draw your imbalance. Okay, this is imbalance here. Candle A's tail, all right, and candle C's head, they are not touching. There is a gap, isn't it? There is. Okay, now let me jump on the charts right now and show you examples. But before I do that, let me cover the last factor. It's not even the last factor, it's like second to the last factor that you need to consider when choosing a perfect order block. And this factor has to do with what? Market structure. So this factor is market structure. You cannot come in an uptrend and you're looking for bearish order blocks. You cannot go in a downtrending market and you're looking for bullish order blocks. That doesn't work. So you need market structure to be on the right side of things before looking for your order blocks, following the market direction. So market structure here is going to help you with that. So now let me sketch something for absolute beginners to understand what I'm trying to say. So this, my friend, is an example of an uptrending market. Okay, and it is often referred to as the bullish market. All right, this is a bullish market structure. So what you're seeing here is a change of character, meaning the market has changed character from buys to sells. So right now, this is an uptrending market. Where is your order block? You see there's extension and there is what? Retracement. So order blocks in an uptrending market, in a bullish market, your order blocks are found at the bottom of the retracement, meaning if the market is trending up, your order blocks are found at the retracement. Right there. This is where your order block is. Then here, this is your order block at the retracement. Right there. This is your OB. All right. Good. Now, you won't come here, you won't come and tell me that, oh, you have an order block here. The reason why you do not have an order block here is because this is, first of all, an uptrending market. Why is it an uptrending market? Because we have higher highs and higher lows. We have a high, we have a low. All right, we have a higher high. This is a higher high because it has broken this previous high and it is higher than this previous high. So this is a new high and a new low. I also see that this low here is higher than this one, meaning the market is traveling upward. It's going up, and it keeps going up until this happens, until the new high breaks this new low with a new lower low, meaning we have a high, we have a lower low, lower than this previous low, then we have a lower high, lower than the previous high. This tells you immediately that market has shifted structure from buys to sell, from bullish to bearish, meaning this right now is a downtrending market, and this was an uptrending market. So let me mark out the structure here for you so you can easily understand. Whenever you see a high take out another high, it is called a break of structure. All right, BOS stands for break of structure. So you can see that market broke this high, formed a low, broke the high again to the upside. All right, that is also referred to as what? Break of structure to the upside. So step one, we go on the chart, we look at the market structure. If we see that the market is breaking structures to the upside progressively, we are going to look for what? Break of structure. Step one. Step two, we go down in this swing low, this retracement here, the last bus stop before the big push to the upside, the last sell to buy candle. All right, that is our order block in this case. So right now we have another break of structure. Where's our order block? Here in this last bus stop, this last pullback here, this retracement or pullback. This is where our order block is. Then now we are going to start looking for sales if our low gets taken out. All right, so here this is our newest low. Before this low got taken out here, this forms a change of character. This is referred to as a change of character. It is not a break of structure. Break of structure is when the market continues in a particular trend and it keeps breaking structure to the upside. That is a break of structure. When the market reverses or switches trend, like it changes trend, it stops going up and starts breaking structure, falling down. The first break or the first change of character is referred to as change of character. It's referred to as chalk. It's still a break of structure, but it's better you call it chalk because you know that that is the exact point where the market changed its character. So right now we start looking for sales. And where is our order block situated in this market condition? It is of course situated at the highs. Okay, the last point. So right now, this now here is what is the extension, and this is the contraction. This right here is the retracement or pullback or contraction, whatever you want to call it. But you need to know that the original trend here is bearish. So whatever you see going up is just a pullback, and you should be looking for your order blocks when structure has been broken. So first of all, we come here and we say, oh, structure has broken to the downside. Where is the top or where is the last buy to sell candle here that caused this break of structure? Where is it? It is found at the top of this leg, this price leg right here. This is your order block. All right, we come again here, same thing here. Break of structure, the market has broken structure to the downside. Where's our order block? It is found inside this price leg at the top of this price leg. That is where the most efficient order blocks are found. Now, I would want us, since we've broken down market structure, we're going to take an example, and I want you guys to observe and also rewatch this video over and over. If you do not get anything, please replay this video, do your own research. Okay, I'm not a financial advisor, and this is just my own idea on this particular topic that I'm covering here. I'm not proving anything here. Okay, so now we've covered market structure, right? So now I want you guys to look at this current market here. What can you see? I can see an uptrending market right now. Inside this tiny price leg here, it is an uptrending market, right? But if we zoom out, you see that this is a downtrending market overall. All right, overall, this is a downtrending market. So let's break down this structure from A to Z. Right now, we have what? We have a low. Let me delete this. Let me change this to, okay, we have a low, all right? We have a higher high. This is our previous high, right? This low broke this high. So now we have our high, we have our low. They see that the market pulled back, retraced back into the other block that was here. All right. I don't want to go in there because I have the examples that I'm going to show you. Now, this is market structure. I will show you the examples for other blocks and imbalance and everything. All right. So you have to stick to the end of this video because it's towards the end of this video that you're going to get the whole point. All right. So hang in there. If you're in a rush or you're impatient, click your way. All right. I'm making this video for people who seek to learn this thing the easiest way possible. So right now we have a low, we have a new high. All right. It has broken this previous high, meaning that is our break of structure. We come here, high, we draw out our high like this. You see that the market has taken our structure. What do? We look for our order block, the last sell to buy candle in a buying scenario, right? The last sell to buy candle, this one, order block, broken structure, right? Okay, now we look now for our highs. We draw out our low and we draw our high like that. All right, so we have a low, we have a high. Oh, sorry, this is the high, the recent high. This is the recent high here. This one, you can see there's a pullback here. So we have a low, we have a high. All right, then a high is considered a high when the previous or when the new high has broken the previous high. Meaning, if we have something like this, this is not a new high. Okay, this is a high here because why? This high took structure. This is our new high. It has overthrown this one. So this is what we're working with now. High, low. This is not a new high. It is a high inside the trend. All right, it's an internal high, internal trend. Looking at this thing overall, you can see that this is not a high. So you cannot consider this a high. This will be a high when it breaks the previous high. Meaning you have to overthrow the king to be king. You feel me? So here, you just not a high. You just ignore that. And you know your lines are here and here. You're just looking for the market to break structure so you can carry this thing up. All right. So here, you have a new high. Because why? This low produced impulse that took out the previous high. So now this is our new low and this up here is our new high. All right, so now we're going to continue following the trend and following the trend and following the trend until the market breaks structure here, changes character. So this now is referred to what? As chalk. This is now referred to as chalk. All right, because the market has changed character to the downside. And if you scroll back to the example that I was showing you guys earlier, you see that when the market changes character once, now the market starts trending in the opposite direction. So we were trending up and now we are trending down. All right. So when this happens, we go where? We go to swing high, we pull back, we look for our order block, we draw it out. Another break of structure just happened here, right? We come here and we look for our order block here, we draw it out. Another, you keep doing that until the market changes character again to the upside. So here, guys, you can see that we have a high, right? And we have a low. The market has not changed character. So whatever you do, you must not buy this market until the market changes character, because this market is trending down. Look at this market, lower highs, lower lows, and it is all trending down. If you use a trend line, all right, it's telling you naked eyes without even doing anything. If you're a complete beginner, you know that this market is trending down. Now, if the market is trending down, you must not trade the opposite direction. Do not counter trade. All right, don't counter trend. Don't trade against the trend. Okay. Now that we have established our bias, we know that we're looking for what? Sales only. No matter what the market does, we're looking for sales until this high, this extreme high here gets taken out. So for now, we are bearish. We enter here. This is our internal structure. We keep marking our internal structure out, and we're looking for something in favor of a sell, right? We have a high, we have a low. We have a new high because why? This high took the previous highs. You see all of these highs here, these are not highs, they're just equal highs. This is called liquidity. I'll go more in depth covering this liquidity stuff in my next video. This is not about liquidity, this is about order blocks. All right, I want to give you factors and confluences So the first factor is market structure, and we've covered market structure just now. Let us go into other blocks, and let me tell you exactly what you need to look for when identifying or when you're struggling to compare different order blocks. Which one is the high probability order block? We are going to cover all of that in this video. Okay, do not rush. So right now we have we had a low here, right? New high, because this high took the previous high, so this is our new king. Then we have a new low, because why? This high took out the previous high, and this is the recent high that I'm working with now. High, low, right? Then now this low produced a new high that has taken out all of these highs. So now this is our high, and this, my friend, is our new low. All right, this is our new low. Sorry, we have a low, we have a high, and now this high has broken structure to the downside. If it has killed this low, therefore this guy is the new low. So if we have a low and we have a high, what do we want? We're looking for the market to break structure to the downside because we're looking for sales. Remember? Good. Now, we're just going to have a line placed here because we are just trading. We are complete beginners. We don't know anything. So we just want to, have our charts looking like a nursery school kid. All right. So let's play the price and see what happens. Okay, good. The market just broke structure to the downside. Now, I want you guys to pay attention, okay? Things are about to get really, really interesting right now. The whole purpose of this video, if you've been following along, this video is about order blocks. And now I'm going to show you guys how I personally pick my order blocks. What are the factors that I look for in order blocks? Let us go. Now we have a break of structure to the downside. Step one has been completed. Now you need to do what? Identify, highlight our order block. This is an order block. This is an order block, but this order block is not valid. Can somebody tell me why this order block is not valid? Tell me in the comment section, please. Just comment down below. I read all my comments. This order block is not valid because we need to identify the three candlestick patterns. We need to identify the three candlestick patterns. We need to look for candle A, which is this one, this week, right? Candle A here, then candle B is this black candle. Then candle C, so candle A and candle B and candle A, candle B and candle C are the main, these are the most important things. So candle A has to be small, candle B has to engulf candle C, all right? I'm sorry about this, guys. Let me just mute this. Candle A has to be small, all right? Our opposite candle here is this guy here, right? Before the big push, so that's candle A. Candle B has to engulf candle A. Step two. Candle C has to close and leave a gap between candle A and candle C. There should be like a gap on candle B. All right, this is getting a little bit confusing, but we're going to understand because I'm taking like 3 examples here. I promise you will get it. So you can look here. Let me zoom in a bit so you can see what I'm saying. You see this wick here, right? Look at this wick. I want you to look at this price leg. Let me highlight this price leg. Look at this price leg. This last push here, this last buy to sell candle, this opposite candle here, this guy. All right? You can see that this candle C entered inside this zone because why? We highlighted this zone, taking the highs and the lows of this last candle. So candle C has already mitigated that area. So if candle C has touched that area, we don't need to trade from it because candle C has taken all the liquidity from that area. It's not like the level will not hold or stuff. It will hold, all right? But candle C has already defied our rules. So for me personally, I don't like it. I like my order blocks clean. I need virgin order blocks. Let me show you an example of a virgin order block. All right, let me play price right now. So when that happens, we just play price, keep going, and you're looking for what? You're looking for that order block. All right, let's go. Now we have a break of structure. Let me tell you something. Something you need to understand and something you've been seeking to understand all this time. Because I said this order block here is not valid does not mean that it's not going to hold the trend. It will, but in some cases it will not. All right, and this one too will, and in some cases it will not. So it's just you just need to establish rules that you will follow. So right now we can see that there's something interesting going on here. We have a high. Why is this a high? Because this low here was taken out. So this is a new price like here. We have a high, we have a low. Then now this low has produced a new high. All right. So this is our low and this is our high. So we're looking at this guy. This guy has broken structure to the downside, right? So we have a new high, or have a new low. This is our new high, and the low is going to be formed here. Let me just label that break of structure. Where is our order block? What are the rules of our order block? Our order block must be engulfed, and then it is supposed to be found somewhere at the top of this price leg. All right. So we have a last candle here, a last opposing candle, right? Before the big push. But you can see that after this opposing candle is even larger than all the candles that are here. And that's not the case. It's not supposed to be like that. So our order block is not this candle. It is this slim candles, this doji. I don't know how to call these candles. I don't really do candlesticks. So this tiny, see this doji candle here, is it a doji or shooting star? This candle here, right, is our order block because price came here. There was buyers here and there were sellers. They were conflicting. That's why you see these candles close up like this, because buyers are down pushing this price up, but sellers are up pushing it down. So it closes up like that. Then we have the next candle here, which is inefficient because why? The lows and the highs were already taken out. So the close of this, the low of this candle A here and the opening of this candle C were taken out. So this last candle here, you can see this is the last buy to sell candle. This slim candle here, you might not see a lot in it, but it's a buy to sell candle because there is literally nobody on this candle, meaning buyers are here before this big push. You can see that after buyers left here, after buyers were overthrown here, there were no buyers again. The market now dropped drastically. That's just to tell you that the order block was not here. Banks did not step in here. When banks step in the market, you will see price fly. That means you will see price disappear. That means price is just going to disappear from one point to the other. You feel me? So that's exactly what happened here. Buyers were here. That's why you see this candle has nobody. Buyers were pushing this thing up and sellers were like, no, let's do this. Okay, then the banks entered and boom, snap, the market just dropped. So this is our last buy to sell. You can see that the tail of this candle, the tail of candle A here and the head of candle C has space in between. This space is referred to as what? Imbalance, right? That space is referred to as imbalance. So we come here and we highlight our order block. I like to highlight it and just take this last week just because I like to keep my stop loss there. So this, my friend, is what I will establish, and I'll call this an order block. It will and it might not hold. This is no guarantee, and I've told you I'm not proving anything here. All right. So if you're taking anything from this video, it is your own risk. I've told you, do your own testing, do your own research. Right. So that is, after analyzing this chart for maybe a minute, this is what I can come up with, and this is what I can refer to as an order block. And I'll have a sell limit sitting right here, waiting for the market to pull back in, and I'll keep my stop loss really tight. Then I'll aim for 1:3. Whatever you aim for is your problem. I see traders aiming for 1 to 10, 1 to 25, 1 to 30. You can maybe join that club if you have the balls to, but I don't have those balls. So I just stick to 1:3 here. And yeah, to me, that's the most realistic way I can trade. All right. Okay, let's play price. Okay, good. Let me see something here. Good, perfect. Now we have a perfect order block. Look, come and see here. Pay attention. All the rules, right? Structure has broken to the downside. Remember, our overall bias was sells. Okay, so whatever we're doing here is selling. So structure has broken again to the downside. It has left us with a perfect order block for this example. I mean, perfect order block. Okay, this is our last buy to sell candle. You can see the candle being engulfed. This is candle A, candle A, candle B, and candle C. Let me just label that. Let me label that. Let me label this candle A. This is candle A. This is our candle B. And finally, we have candle C. These are the 3 candles that you have to check every time. Every time, all right? So now here, we are more concerned with these 3 candles. So candle B's, the candle B's own function here is it should overthrow candle A. That means it should impulse candle A. It should be larger than candle A. Once candle B has fulfilled that, okay, candle B is out of the picture. Now we have to look at candle A and candle C. Where is the close, or where is the wick? Where is the last point of this candle here? This wick here of candle A. We draw that out with a vertical line. Is it a horizontal line rather? We draw that out with a horizontal line like that. Then we also look for candle C, all right? So it's candle A and candle C here. We look for candle C's open, which is here. This is where candle C opened and dropped, right? Right here. You see, it left that space, this gap here, that we refer to as what? We refer to this as imbalance. IMB, imbalance. Perfect. Sorry about that. We refer to this as imbalance. So when we have this, when we've established this particular rule, I want you guys to follow this, screenshot this particular image right now and keep. I'm giving you 2 seconds to do that. Screenshot this and keep it somewhere. This, my friend, is your order block. All right. This candle is your order block. You draw it out like this. Name this order block. Let me just put that up there. Take a screenshot of this. Take a screenshot of this if you're on a PC, phone, whatever you're using. Screenshot this particular image and keep. So it's going to help you. You know, every time you look at it, you go to your charts, you look for common examples like this. Then look at what happens every time price gets there. Even if the move is not that big, you see that price has to do something around there because this is a valid order block. Okay. Okay, good. So if you screenshot the video, if you screenshot it, perfect, sweet. Let's get to it. Right now, you can see that there is still imbalance up here. Even though we have a valid order block, we still have another order block up here, which has imbalance, all right? This is the imbalance here. I didn't even draw this. I didn't even mark that one out because I thought you guys already saw it. We have kind of A's close here, all right? And we have kind of C's open here. You can see that even though these ones have like traded inside here, it has not traded inside this gap. I'm taking this high here. Look at it. This gap is still there, meaning, my friend, that gap has a long way to go. And you cannot ignore that gap. All right. So if you're trading here, you're trading at your own risk. For me, I like to take the extreme zones. If I have a zone line above my order block with imbalance to it and with all the rules met, even if there's a new order block formed down, I will not take it. I will take the extreme zone because price will weak here and weak there. Or sometimes price will reject and enter here. Or you can place 2 orders. Meaning if you have an order up there, you should have another order here. Like that. Let's just see, we're aiming for 1 to 3, both of them. 1 to 3 there. Let's go to aim for 1 to 3, guys. Let me just keep that there. I don't want to make this video extremely long. I'll just take these lows. Since I'm also aiming for these lows here, there's no point of me aiming for these lows, then I'll just keep that one up there. So that is exactly what my trading would have looked like if I was doing this live. All right. So this, my friend, is my order block. What are the rules? Like I stated, let me put them on the screen for you. First rule, market structure. Okay. It is either up or down. All right. So you should rewind the video if you were not there. If you didn't get that point perfectly, that's the first one. The second one is what? We look for what? The order block. The order block, which is the order block is what? Imbalance. Imbalance plus, it is imbalance plus the order block plus the market structure. All of these things in place. You have to make sure they're there. And also, there should be what? Virgin. Let me just put there virgin. I don't know, is that the spell is virgin? Virgin. Meaning when I say virgin, I mean like the key, your order block must not be tested. The example that I showed you here, you see that there's an order block here, but it has already been tested, meaning this is not a virgin order block. This is a virgin order block because it has space here, nothing has entered there yet, so it's still holy. All right. So we're looking to trade when price gets there. So if we are not sure enough, because we have two perfect order blocks here, you can place two orders there. If you lose this one, you catch this one for sure. Okay, so don't be scared of losing because you're going to catch this one and you're going to make profits that will cover your losses. So instead of like, being like, no, I'm taking just this one and the price reverses here and you lose out on all of that, is really hurting. So place two orders there and sit back. You have nothing to lose. If you catch one, you're going to make your money back. So if you're very certain that one of these levels must hold, then place your orders right there. Let's play price now and see what happens. Let me zoom out. Let me zoom out so we can all see, yeah. Okay. This is a 15 minutes time frame. This is an intraday trading time frame. I like the 15 minutes a lot, so you can trade whatever time frame that best suits you. So you can do it on the 4-hour, you can do it on the 1 hour, you can do it on the daily, you can do it on the 5-minute chart. Price action is fractal, meaning it is the same on every time frame. Okay, guys, we had a week here and I paused price. Let's see what that looks like if we were on this trade. This is exactly what it would have looked like. This price, this market here, wicked inside our limit order and ran almost hitting our TP. And then it started reversing. Disclaimer, if I was in this trade live, right? If I'll be following market structure. I'll be following market structure on a much smaller time frame. So if market fails to respect an order block, I would have broken even here with my stop loss. I would have moved my stop loss to break even or like 1-to-1, secured like your previous high. So for example, if we have like price breaking structure to the downside like this, and I'm in a trade up here, if the market breaks structure the first time, pulls back and taps in the order block, drops again, I'll move my stop loss now from this high, meaning if my stop loss was like up here, if my stop loss was like up here, I'll move my stop loss down here to this last high because that's broken structure and market might want to enter here before going down. So if market now does not respect this high, then I want to be out of that trade. So at this trade here, I'll probably leave with like a 1% profit. So it depends how you manage your trades. That's exactly how I manage mine. Let's go. Let's play price here. I want you guys to see this ultimate zone and what this ultimate zone can do. So you just have to bear in mind that if your zone fails, it's because it's moving to the other zone. So you need to know exactly where those zones are. You must not catch every trade, all right? So just try to catch the best trades possible and make sure that all your rules are met all the time. So this is exactly what trading would have looked like. You don't know exactly what will happen next. You just have to keep watching. Okay, we have a tap into our zone. And you see exactly, Mama me, oh my God. You see immediately price tagged us in this trade. Immediately. Market dropped. Do you know why? That is where the banks were aiming. That's where the banks were trading. This one here was like a trap that they were putting for people to get in early. Without these rules that I've just taught you in this video, you are not going to be able to catch trades like this because you always get yourself caught inside the noise. So you need to understand, watch this video from the top, from the beginning to the end. You need to understand what's going on. And this price continued dropping. This is where the price is currently at right now. Right now, as we speak, you see it's refreshing now. All right, this is the live market. This is it right here. You can look at the time here, it's moving. That's the live market. I was looking at this thing since yesterday. All right, I missed this trade and I could not re-enter. So you can see here that price had two perfect order blocks here. This order block has nothing wrong with it. The reason why this order block is a low probability order block is because this order block has imbalance lying above it. And if there's imbalance lying above it, price will have to fill that imbalance before dropping. So this space that was here is the problem with this order block. The order block itself has no issues. It has its own qualities. But now if you have another space above you, the market will have to fill that space. And the only way to fill that space, it has to go through your order block, sadly. So if you are here ignorantly, you can manage your way out of this trade. Then make sure you have your orders sitting here. You see up here, there is candlesticks here, but the market has no reason to come up here because there's zero imbalance. So imbalance, at the end of the day, imbalance is the golden, that is the most important thing. And I'll cover liquidity. Liquidity is another very, very important factor that has to do with trading. But for me, my number one, or my most important rule is the imbalance rule. Okay, so you must not break that, because everywhere there's imbalance, the market always feels it. So thank you guys so much for watching this video. If you watched it all the way to the end, this is probably my longest video that I've ever done. So please show your support to the channel. I'm posting videos on this channel on a daily basis, so please do some consider subscribing. It goes a long way to support. As you can see, my channel, I'm new on YouTube here, so I need your encouragement and support to keep going, because it's been like a few days now I've not dropped the video. My videos are not popping, people are not watching, and people are not subscribing. So I want you guys to please support my channel, subscribe. Thank you for watching. And before I forget, I have a link down below to my public Telegram channel. You can join that. There I share some of my analysis, and I also share latest news and updates. And I also have a Signal group, a VIP group. That is in this group, members come there and I share them my signals, meaning if I'm looking at AUDJPY right now and I see a sell trade, I send them the signals and they trade them, and they pay $50 for a month. So if you're buying my signals directly, you can join that. You can message me by clicking on the link below. So thanks for watching again. My name is Ghislaine.